The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Coming to you live from TFNN, 8:30 a.m. Friday morning, 60 minutes to go until that opening bell. Quite a week we've had, and the volatility is continuing. Right now, you've got markets in negative territory, pulling back from the highs we had last night. We got the S&P futures negative by about 59 points, trading at 25.48. Last night, reaching a high of 26.34. Remarkable run. I got a chart of the S&Ps up here. You start the run at about 2,400. Yesterday morning, we got weekly jobless claims, a historic day, 3.28 million. You proceed to see the S&Ps from ballparking 2,400 up to 2634. You're talking about 230 points to the upside, almost 10%, a remarkable run. From there, though, we just pulled back more than 100 S&P points. You're talking about almost a 4% pullback from the overnight highs. Right now, you have the futures markets down about 2.3% in the S&Ps. Jumping over to the other indices, we'll start things off with the Dow. We'll back things up so you can see the run that we had yesterday. 8:30 in the morning, the Dow trading about 20,500. How about 2,000 Dow points added to that index? Quite the acceleration, even in the final 10 or 15 minutes of the day yesterday. You extend those gains afterwards, making highs in the markets at about 8 p.m. Eastern time. The Dow, that correlating to about 22,500. Overnight, we trade down about 900 points at one point, 21,608, getting a little bit of a bounce, 21,797 right now in the Dow. S&P 500, we covered. We made it to a high of about 2634, pulled back about 100 S&P points, just more than that level, getting a little bit of a bounce at 2548. NASDAQ 100 trading at 76.75. The highs last night just approaching 7,900, a far cry from almost 7,300 we were trading at early in the morning yesterday before that weekly jobless claims number. Crude oil continuing to struggle. Crude approaching $22. You see the volatility. You just back things up. Not that long ago, in terms of Wednesday afternoon, you were approaching $25, but crude continuing to struggle. And the gold market, 16.18, pulling back a little bit as well. Gold at about 2 a.m. was trading approaching 16.50. You've fallen out of bed at about $30 to the downside on gold on that level right now. And the euro-US dollar just above 110 at 110.02. In terms of coronavirus update driving the market action, you now have the U.S. with the highest total of all countries, surpassing China and Italy, 85,996, the tally for the number of infected in the U.S., exceeding China at 81,000, Italy at 80,000. Total confirmed cases, 549,000. You see the curve on the bottom right hand of the screen. Quite an acceleration, parabolic indeed. You push that to a daily increase, you see the climbing, not slowing down across the globe, that's for sure. Hopefully things are able to be under control at some point in the near future. In terms of stocks, so why not? We'll jump across. We were waiting for personal income, rising 0.6% in February, 0.4% increase expected. Pretty remarkable that what we have going on is any type of an economic indicator that we're getting for February, we're getting for like the last 2 weeks, even the last week, not really that important in the market when all they're worrying about is what is going to happen in the future. Checking in on some of the stocks driving action this morning. So you have Gap, the parent of Gap, Old Navy, Banana Republic pulling their full-year forecast that issued earlier this month. Again, I covered this with Tom yesterday. You know, I think you had one of the retailers out there, whether it was Target, Nike, pulling their forecast. You would be a fool if you're a chief executive officer, if you're anywhere in the executive suite, and you are not pulling your forecast right now. Not much risk. Of course, you might be punished a little bit in terms of trading, but set the expectations low. You have no idea what's going on. As an executive, it's a unique situation where you can actually say to the market, I have no idea what we're going to make in about 3 months, in 6 months, in the next year. And the market kind of understands why you might not have any idea what you're going to make. Gap also said it's going to draw down its entire $500 million credit facility. Another thing we've been covering, if you have access to credit, take it all. Take it all right now. Get the cash in the books. Pay for whatever you have to, because that credit could dry up. And cash is king, especially in this type of an environment where you're going to have a 3-month, 6-month, a year-long pause. The companies that can weather that pause with cash flow, with cash reserves, whether it's a loan, whether it's debt, credit facility, they're the ones that may come out on top when this is all done and said. Separately, Moody downgraded the credit rating for both Gap and Macy's. So they get a downgrade in their credit. They access the credit they have probably before those credit, the rates go up for them. But GPS this morning, GPS, you see the shares down a bit from 850 down to 811 on a longer term time frame, though. Check out that drop from almost $20, maybe 18 and change back in February, to $6.04, the low made on March 23rd. KB Homes out with their earnings, 63 cents a share, beating the consensus estimate of 18 cents a share. Quite a beat. Revenue also above forecast. Quarter was driven by a 31% increase in orders, 28% jump in deliveries. However, KB Homes also withdrawn its 2020 forecast, given the uncertainty. That should all but be a guarantee. If you have an executive that is KBH, as we pull it up, that is clinging to some kind of a forecast before this coronavirus pandemic ripped across the world. I don't know what they're thinking, but KB Homes, 1908, going to open at about $20, putting this down. That's 100% pop from where we were trading at almost on Monday. 2132 on that news initially, 1985 right now. Lululemon out with the earnings as well, 4 cents a share, beating estimates by 4 cents a share. Quarterly earnings, $2.28 a share, The athletic apparel maker's revenue slightly above consensus. Company said it saw a significant downturn during the second week of this month as the virus outbreak forced it to close its U.S. and European stores. I would imagine so. Lulu, quite the retailer, relying on malls, mall traffic, foot traffic. 193 this morning, closed at 200, spiked to 204 initially for a little bit of longer term projection. 266 down to 128. Talk about a rebound up to 200. The volatility is just unreal, folks. You can't even surmise it. Cheesecake Factory, we covered this a bit yesterday. They're furloughing about 41,000. Did you catch that number? 41,000. To put things in context, so we got a 3.28 million jobless claim number yesterday. You had the record for weekly jobless claims about 697,000, I believe. Cheesecake Factory alone, 41,000. I mean, the numbers just don't exist anywhere else. Cut pay for corporate employees by 10 to 20%. It's in talks with landlords about its rent obligations. The moves to deal with the virus outbreak were detailed in SEC filing, so material impact filing with the SEC. You're going to open at about 1850. You closed at 1966. Cheesecake Factory's fallen out of bed from above 40 down to 14. Now going to open at about $20. WW International gets an upgrade. Weight Watchers parent to overweight from equal weight, which expects an increased focus on health, wellness, and weight loss post-COVID-19 following weeks of limited physical activity and stress eating. Interesting dynamic there. People at home, are you going to use that time to snack on some bonbons on the couch? You're going to use that time to get out, get a walk, get some exercise. They're thinking that once this is all done and said, people are going to use it as a rejuvenation to kind of recalibrate, get healthy, and whatnot. So you're up at about 17 for the bid offer, but Weight Watchers from 47 in January to when all began at about $40 down to 9 and 17. Stay tuned, folks. We'll be right back for the program.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Markets in negative territory. I'm going to jump to oil for a moment. I got a daily chart up here. I'm going to put it on a 15-minute, though. Check out the acceleration, even as we came on the program. 8:30 a.m. bar. We started the program. We were trading at about 22.24. Oil's dropped another 50 cents right now, 21.71. The pain in oil just continuing. You back things up to even to where we were Wednesday afternoon, that is. Yes, 2 p.m. Wednesday. We were at $25. We're going to be at about $21. That's a percentage move, just remarkable, folks. $4 on a $25 commodity. $5 would be 20%. So you're talking about 15 to 20% drops in the price of crude. In terms of what else you have going on, continuing with the theme, where are we? That's the one I wanted. Boris Johnson, if you haven't heard the headline, unfortunately for Boris, testing positive for the coronavirus. Hopefully he's doing well, just mild symptoms right now. But remarkable, as this just reverberates, nobody out of harm's way in terms of this virus now affecting the Prime Minister of Britain and the UK, and it's so he is still going to be in charge. He's going to do things remotely, making him the first major world leader to have contracted the disease. In a video posted to Twitter, he had developed a temperature and a persistent cough. He would self-isolate at home, continuing to lead the government's response to coronavirus. You know, I'm sure he's going to try, but if you get sick, number one, you're not 100% on your game, all right? You're feeling sick, you got a cough, it's a deadly virus. Not sure how well he is feeling to do things. And then, you know, you got to be self-isolated at home. Thankfully, in the day of interactive technology, you can do a lot of things, but can you do everything that we need to combat such a problem? We will see. What else in terms of headlines I have out here? That's the one I wanted. Check out the percentage moves in the S&P, folks. So this week, 9.4% on Tuesday, 1.2 on Wednesday, 6.2 on Thursday. Biggest three-day gain in the markets going back, I think it was to 1933 or something like that. But the moves are just staggering when you put it on a percentage, right? You go back to March 12th, you had 9%, 9%, 12%, 6%, 5%. My goodness, 4, 3, 9, 1, and 6. And today, it looks like right now we're going to open the market at about 3.5%, 2.6% in the S&Ps. Let's see where we're looking in the Dow, 2.7% right now in the Dow as well. In terms of morning market update, check it out on the front page of TFNN. So you have the U.S. has more coronavirus cases than either China or Italy. Put this up at about 7:30, I think, this morning. There's your Johns Hopkins map, remarkable map in terms of what they're putting together. If you haven't checked it out there, folks, I have a link for it right on the morning market report on the front page of TFNN. I talk about the UK Prime Minister, Boris. But what I also talked about here, the percentage moves are just remarkable. I've been talking about them. So you had, number one, the move from yesterday morning, which I touched on, 24.02 up to a high of 26.34 last night. That's 232 points. If you correlate that from you had bought the low right at 8:30, and I bet there were a lot of people, folks, that maybe had said, you know what, I'm going to buy this number for the jobless claims because I bet the market's freaked out. Once they get over this number, maybe we trade higher. How about almost 10% in under 12 hours? To the high we got last night. If you back it up to the low we got Sunday night, right? 2174 the S&P futures traded to. That was limit down in the S&Ps. Okay, so we were probably theoretically actually lower than that if the markets had just remained open. But 2174 for limit down in the S&Ps, and you just traded to 2634. That is 460 points or 21.18% from Sunday night to Thursday night. We got a two-way market. That's a trader's paradise. The pain is going to continue in terms of we're going to see days that are going to be harsh. We have weekly jobless claims again next Thursday. The big things are what if people couldn't get in line for jobless claims? What if there was sites crashing that they couldn't be in there and really register for weekly jobless claims? Nonetheless, you're just going to have layoffs for the next week happening. So that number going to continue to climb. There's going to be volatility. We'll see what happens, but just the moves are remarkable. You can't overstate it too much. The Dow, 22,545 we were up to. NASDAQ, 7893. The note market mellowing out a bit, putting this on a 5-day chart. I mean, check out, that seems like the tamest we've seen in notes in a while. You had the spike from Friday to Sunday to Monday, but since then, we've kind of just been hanging out a bit. And don't forget, folks, the open house on the front page of TFNN for the Tiger's Den. Check it out for a limited time. You get 30 days free for the Tiger's Den open house. Head on over to the front page. You can click on that link, subscribe, click on that month, get in there, $39. Enter the promo code OPEN, OPEN. Add that code, $39 taken off, completely free for the month. Lots of good action in the Tiger's Den. I was in there about 6 a.m. myself. Tigresses already chatting it up in there at a time of volatility, unprecedented volatility. I encourage you to check that out, folks. So we're going to jump to Trump. Plans for classifying coronavirus risk county by county. So there's a lot of angst about getting political, right? In the age of finance, we try and keep it to stocks here, folks, but I don't know how you condone a plan county by county unless you don't have people traveling county by county. We're in Florida. You have Hillsborough is Tampa, very populated. Pinellas County, St. Petersburg, where our office is located. Very, very popular. One of the most populated counties in the state or the country, I believe, Pinellas, that is. And I just don't imagine how you have county classifications and how that, I know the president wants to get the economy started back up. I want to get the economy started back up. Who doesn't want to get the economy started back up, but at what expense, folks? And if you don't take drastic action, this is just going to continue on a rolling basis. I can't imagine how this type of a plan is going to function in any type of a redeeming quality, okay? I don't know if you do. Phone lines are open, folks, 877-927-6648. I'd love for somebody to tell me how one county might be hit hard by this, another county not hit hard. You have differing levels of quarantine and social distancing being set up. Meanwhile, you could have people traveling from the hard-hit counties to the counties that are not hard hit. And so you have people that are not social distancing when they're coming from the counties hard hit because they end up in a county that's not hard hit. We have Polk County that's more in the middle of the state. not as hard hit. So what happens? In Polk County, it's business as usual. In Hillsborough County, they have social distancing. But if you happen to drive 20 miles from Hillsborough, you bring it to Polk County and everyone's business as usual. I don't see it happening, folks. Use your head. All right. Think for yourself. It's remarkable what's coming out here, and it's not okay. And, you can say you're getting political. I don't understand how this works. All right. And it's a bummer that we're coming into a presidential election because there's going to be a lot of pressure to get the economy back going. And with what's going on in New York right now, all right, we're in Florida. We have an aging population in Florida. Just keep your eye on what's going on here, because I don't know how a county-by-county plan has any idea to succeed in this market, and you better wake up to what is going on, because that is a zero possibility of success, in my opinion, I'll add as a classifier. As we wait for the break, jumping through some of the indices again, kind of just been hanging out from where we've been since about 8:30. 76.49, the NASDAQ 100. You have the S&Ps trading at 25.31. The low we made at 8:15, 25.25, and the Dow right now sitting at 21,651. Stay tuned, folks. We'll be coming back for the program, finish up what else we have on tap for Friday trading. Stay tuned. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So what else you have happening in Washington? So you have House members racing back to Washington amid fears the $2 trillion coronavirus bill could be delayed. So you have both Democratic and Republican leaders suddenly believe the $2 trillion economic relief package might not pass by the long-distance voice vote, scheduled for Friday. So you got Democrats and Republicans scrambling members of Congress to Washington late Thursday because they suddenly believe that bill might not pass by the voice vote planned for Friday and could be delayed if at least 216 members don't show up for the vote on the floor. Members are now racing to get back to Washington by this morning in the middle of the pandemic because leaders fear that at least one member, likely to be a Republican from Kentucky, will demand a recorded vote. That's a bummer, folks, all right? That is an extreme bummer, to put it lightly. The Office of the Majority Leader, Stanley Hoyer, wrote in an advisory to members Thursday night, members are advised that it is possible this measure will not pass by voice vote. Folks, you got the Prime Minister of the UK testing positive. You have senators and congressmen testing positive, okay? And you're going to have a political display from a Republican from Kentucky that's going to demand that they get back there instead of a voice vote. That's a bummer, and that's pretty sad that that's where it's come to, but that's where we find ourselves. Checking back in on the market, you get the Dow 30, 21,691. Oil market, 21,955. That gold contract, 1624. As we wrap up the program, checking in on some of the FANG stocks, you got Amazon shares made it to about 1950 yesterday, opening at 1926. Microsoft shares 151 this morning, closed at about 156. Facebook shares opening lower 158, closed at 163. Netflix, 357 this morning, closed at 362. How about Google? We'll round it out with 1127, closed yesterday at about 1161. And we'll wrap it up with the VIX climbing a bit today as we pull back in the futures markets. The VIX trading at 67.90. End of the day yesterday, just above 60. Stay tuned, folks. Larry Pesavento coming up live at 9. I'll be back at 10 o'clock with Tom. Volatility continues. Should be an interesting day in the market. Stay tuned, folks. We'll be right back. Larry Pesavento coming up with